Okay, we'll go live. Good afternoon, everyone, and welcome to our panel discussion focused on the businesses here in Western New York and the impact the COVID-19 pandemic is having on their financial well-being. This virtual event is brought to you by the Niagara University College of Business Administration's Family Business Center, the Center for Supply Chain Excellence, and the Center of Excellence in Food Marketing, all supported by the Niagara University Career Services Department. My name is Jack Ampusia, and I'll be your moderator this afternoon. When I'm not moderating these sessions, I serve as the executive in residence at the School of Business Administration, which basically means I teach on the basis of experience, and I co-lead the Center for Supply Chain Excellence. I've got a lot of time put in with the Family Business Center, so I've met a number of our panelists for today. So I'll introduce each of our 5 panelists, and then we'll go on to the questions. But before we launch with that, it's a couple of housekeeping items. Number one, for everyone on the line, please be aware that this event is being recorded for future use at the university with university supporters and with students. Please mute your microphones if you're on the line, because it'll make for clearer hearing for all of us. If you want to ask a question, which is possible to do, type them into the chat window. I'll see the questions, and although we have a list of prepared questions, if there's time, we will try to work in questions from the participants. Now on to the introduction. Our first panelist this afternoon is Brian Donahue. Brian is the Chief Operating Officer of Freed Maxick, based in Buffalo, and Brian will give you a chance to tell you a little more about his company when I call on him with a question. The second panelist is James Ganan. Jim is the owner of Planned Futures Financial, based in Amherst, not far from where I live, and a very strong supporter and one of the creators of the Family Business Center for the university. Welcome, Jim. Our third panelist is Martin Griffith. Marty is president of the Bank on Buffalo, and someone that you probably see on television with Bank on Buffalo ads periodically. I pointed his smiling face out to my wife, saying he'll be on our panel shortly. Our fourth panelist is Franklin J. Shortino. Frank is the District Director of the U.S. Small Business Administration, a man that brings a wealth of knowledge, years of dealing with small business, a very deep perspective he'll be sharing with you. And our fifth panelist is Michael A. Taylor. Mike is Vice President with Pursuit Lending, which is a fairly new name for a couple of business entities, but Mike will have a chance to tell you more about that in a little bit. So we'll start the questions with Brian Donahue, and we'll get each of the panelists to answer the same question. But Brian, what are you seeing now in the business community at Freed Maxick? What are you seeing with the companies that you're serving? And are there any strategic moves that you can suggest for small businesses at this point in time?
Thank you, Jack, and hello, everyone. It's great to be here. Freed Maxick is a top 100 CPA firm with offices in Buffalo, Batavia, Rochester. We do auditing and tax consulting and other consulting services for a wide variety of industries, agriculture, healthcare, manufacturing, real estate, just to name a few. We have government clients, so we service a lot of broad sector. You know, we're living through incredibly unprecedented times, and I think the one-word answer that we're seeing with clients and with all businesses is just uncertainty. And a lot of questions are coming up about, how do I operate my business, and how do I protect my workforce? How do I protect my customers? Will my customers return? What's going to happen 3 months from now in September? You know, we're hearing this second wave could come, and is it going to affect my employees? Is it going to affect my business again? Strategically, I think all businesses, you know, have to be very nimble and plan. It's easy to say, but hard to do. We all like consistency in our businesses. We rely on that consistency, but we have none anymore. It's just, you know, completely uncertain, as I said before. I'm sure that when budgets were created in late 2019, there was no line item that said pandemic cost. There was no thought that I'm going to have maybe zero revenue for half of March and all of April. There was no thought of the federal government coming in with a significant loan buyout or bailout, and I'm going to have this line called PPP loan forgiveness. All of these have created a lot of uncertainty in the marketplace. Those budgets just need to be scrapped. You need to really take a hard look at where your business is now and what do I have left that I can bring together to get me going again. It's almost as if every business is in a startup phase. It's really an interesting time. I think budgets need to be a rolling budget now. We look out 2 and 3 months, and after that, there is so much uncertainty about what's going to happen in the fall that what am I going to do for the next 2 or 3 months to make this work? We used last year as a guidepost, the last 2 years as a guidepost to form our budgets. Those guideposts are really just completely unrelatable to what's going to happen in fiscal 2020. So we need to start from scratch. Businesses need to look at their revenue cycle. How do they make their money? What products do they sell? Are those products applicable still? How do I deliver my products to customers? Do I need a storefront? Am I reliant on the retail trade, which is, having significant difficulty as they contemplate opening? Who are my customers, and what are they doing to, make sure that their customers are still viable? It would help if you could create an annuity item, something that's going to bring you cash time and time again without, having to do anything. Annuity items are so important. How can I get into that type of subscription, what I'll call, mode? Then you have to look at your vendors, your supply chain. Is your supply chain viable? Is it current? How are they delivering to me? At the company I used to work for, our major suppliers for raw materials came out of Canada. That border has been closed to pedestrian traffic or to non-commercial traffic. But what happens if it closed altogether? Where would that company get its raw materials from? So you have to make sure you've got a plan in place to supplant those products that you would normally get from potentially an overseas vendor. And last but not least, workforce. How do I protect my workforce? How do I bring them back? How do I make them feel comfortable when they are working in the plant, in the warehouse, in the office? I mean, a lot of our offices have been designed as an open concept now. Definitely doesn't allow for social distancing. We all wanted the big expanses where people can collaborate, all those neat collaboration areas that we came up with. How do I now transform that office into something that can really be there? So it's a lot of planning, a lot of dedication, a lot of hours that are going to have to be put into answering all of these questions, Jack. There's just so much there that I think business owners are being uncertain and not need advice and there have been a lot of great webinars. This one's a great webinar for people to watch and listen and learn.
Thanks, Brian. Your term for these times as being interesting was an interesting selection of words and certainly very applicable. Jim Gannon, how do things look to you from the financial plan futures perspective, and give us a little snapshot of your business?
Thank you, Jack. We're a full-service financial services company, and as you said, in Amherst. We started in 1997, and our business focuses on professional people, medical and dental professions, and small business owners. And the people that I have surrounding me are designed to support that end of the business. To answer your question with regard to what we see in the business community that we service and any suggestions that we have for them, the first thing that I notice is they all need a haircut, myself included. I still have my Niagara haircut here going. I can't wait to get to the barber. I think what we're going through now, as Brian was talking, I think you could call this a Darwinian time, where there's going to be a survival of the fittest. And some companies are not going to make it or they're not going to make it in the way that they anticipated. And there might be some value in that, as an economy, but certainly on a one-to-one basis, it's heartbreaking to see struggles that some of these companies are going through. So, when I have contact with my clients, and they ask me my advice mostly on financial things, naturally. But what I tell them is what I was told by one of my mentors during a past recession that we had, and he said, to the best of your ability, try not to participate in the recession. I thought that was kind of a glib comment, but there's I think a lot of wisdom in that. Is see what you can do individually to get beyond or circumvent the bad things that are happening. And the best way that you can do that, and probably the only way you can do it, is to control what you control. There's elements that we're all being afflicted with right now that over which we have no control. And so we have to do a reassessment of what we do have good control over, and then refocus. And again, as Brian said, that means rebudgeting, planning around the disruptions, like the supply chain disruptions, and in a financial sense, where can we access money that we need beyond what the government has provided. And later on, I know you're going to ask me a question about that, so I'll elaborate on that a little bit more. And so the bottom line is control what you can control, and be as creative as you possibly can, and seek out resources.
Thanks, Jim. Marty Griffith, can you give us the perspective from the Bank on Buffalo and tell us a little bit about your company?
Sure. Thank you very much, Jack. Bank on Buffalo is one of 4 divisions that are folded up under one holding company located in northern Pennsylvania. Our roots go back to the late 1800s and started out as a very, very small community bank in very rural markets, and have now expanded into 3 states. So all told, we're a little over $4 billion in total assets, operating from Pennsylvania, Ohio, and now most recently here in New York and the greater Buffalo area. So after 20 some odd years in various community banking positions, ventured out to start Bank on Buffalo. And we're now number 7 deposit market share here in the Buffalo area. And we really ostensibly recruited very heavily from what was First Niagara Bank, brought a lot of talent on when they sold to Key Bank in lending positions, treasury management positions, wealth management, and private banking positions. So we're a boutique-ish, niche-style bank, very hands-on, probably get to maybe a similar decision as most banks do eventually, but we tend to get there very quickly. And so it's speed to street, and I think common sense banking, I guess I'll end with our motto is we look for a way to find yes in every situation. So we like to tell people what we can do, what we not versus what we can't do.
Excellent, Marty. Thank you. Let's move on to Frank Shortino, District Director with the U.S. Small Business Administration. I know from his background that Frank has done this kind of work assisting small businesses for 50 years, or actually more than that. So Frank, can you tell us a little bit about the Small Business Administration, which many people don't know a lot about, and what are you seeing from your perspective on the COVID-19? Frank, you're muted. There you go.
Can you hear me now?
Yep,
Okay.
Go ahead.
I represent the U.S. Small Business Administration, was formed in 1953 by an act of Congress to aid, assist, and counsel small business. And that's 67 years ago. And don't believe it when they say I've been here since then. I've only been here 55 years. So that's what we do. And I think that the things that's going on now is the fact that everyone should know that all of our programs and services are available to support small business and family businesses during this pandemic and after. And of course, everybody's interested in the PPP program, the pay program, protection program, but we also have guaranteed loan program is still available to support financing needs. We have term loans, lines of credit, support outgoing operations, even And the bottom line here is that SBA is there to help. We offer technical assistance through our resource partners, SCORE, SBDCs, Women Business Centers, and these organizations can help businesses evaluate their business models, find markets, enter in e-commerce, prepare themselves for financing. And the best part of this service is free of charge. And don't forget the government contracting program that we also do. The federal government is the single largest buyer of goods and services in the world. And even during this pandemic, we have thought about this as a way to grow your business. Maybe now is the time. And if that's the case, our staff is here to help you evaluate and navigate this opportunity. And that's what we're here for.
Excellent, Frank. And if you didn't pick up on the key word that Frank mentioned, his organization provides free support courtesy of the U.S. government. So that's a terrific resource that's available to anyone in the local area. And then we'll move on to panelist number 5, Mike Taylor. Mike, could you tell us a little bit about Pursuit Lending and what your company is seeing on this COVID-19?
Sure. Thanks, Jack. So Pursuit Lending, we had, up until just a few months ago, been known as New York Business Development Corporation. We were actually established by an act of the New York State Legislature back just shortly after World War II. It was determined that at the time that there was not enough lending being done to minority-owned businesses, women-owned businesses, things like that. We were established in order to work with the banks to find ways to get lending opportunities to those specific businesses. Over the years, we've grown. We're able to lend money to almost any type of business, very few exceptions. We continue to work strongly and have a strong alliance and partnership with the banks in New York. I would tell you that one of the sayings that we have in our organization is when the economy is good, we're busy. When the economy is poor, we're busier. So this is no exception. We are busy from a number of different fronts, traditional lending, SBA lending, payroll protection loans. We're looking at a lot of different things right now. 9 to 5 does not apply today.
Thanks, Mike. And while you've got the hot microphone, can you give us any insight on what programs businesses should be focused on as they emerge from this period? What kind of things should they be coming to Pursuit Lending for assistance with?
Well, what I would tell you is that not only are these things that you should be thinking about before you come to Pursuit, but I'm going to speak for banks in general. I used to be a banker, call myself a reformed banker. I used to work at HSBC. So things that we're questioning right now, and a lot of it has to do with words that I've heard already today. There's uncertainty in the market, control. These are words that we take into account as lenders very, very seriously. The whole idea behind lending is to try to figure out a way to reduce risk or reduce uncertainty. And how are we going to get repaid? And what kind of control can we put in process to make sure that we do get repaid? So I would say because the situation is so uncertain, I think anyone that's looking to go to their bank for assistance, they need to be thinking about a business plan. And oddly enough, just before I came on this call, I was speaking with one of the loan counselors at the Small Business Development Center, which works with the SBA and can provide free counseling. A business plan is going to be very important to take into account how your specific business has been impacted by the COVID situation. Things that are going to be you're going to want to think about is, what extra costs are going to be incurred. There's going to be a new way of having to do business, and how is that all going to work, and how is that going to look? How is that going to impact your revenue streams? What type of limitations are you going to be looking at? The easy example are restaurants. Restaurants are going to need to have a certain amount of social distancing in place. All of those things not only need to be understood, but needs them to be encapsulated not only with numbers and a projection, but what I always say is more important than the numbers is the narrative and explanation behind it, so that we can understand what the numbers really mean. And something that people aren't thinking about, but I know we are, and I'm going to guess most bankers are thinking about as well, is PPP. So let's say someone got a payroll protection loan back in April. Well, they're coming up soon. Well, there's going to be an extension, it would seem. But either way, not in the too distant future, we're going to have to know if that is a forgivable loan or if that is a loan that is going to have to be paid back. And what's going to be the dollar amount of that repayment? How's that going to impact overall cash flow? Those are types of things that we need to try to get our hands around as best as we can. Certainly, if you're looking to go to your bank for additional financing, you're going to need to have a good understanding of how that payroll protection loan is going to be handled. And ideally, if it's going to be forgiven, I got to tell you, I'd like to know that it's forgiven and in place, that forgiveness is in place before we close on the loan. So those are things you would want to think about. I just jotted down a couple examples of situations where my own customers have been impacted by COVID that you may not be thinking about on a day-to-day basis. A butcher shop or a grocery store, or I even have a fresh dog food company. They have all been negatively impacted. They're doing okay, but they've all been negatively impacted by the meat supply. That has caused disruptions. That has caused a lack of inventory. That has caused price increases. There's a lot of things there that have to be taken into consideration. Right? They originally thought everything was going to be good. Now in the middle of COVID, now they're suddenly having some problems that they did not expect, thus uncertainty and how do we control. Another industry that we do a lot of lending to are hotels. And everything that's designed, while it's designed certainly with the best interests in heart, and it's designed to try to help as many people as possible, hotels are a tough industry right now in that they're being helped to at least get through the next few months. Well, a hotel's busy season is the next few months. Once September, October rolls around, hotels are not going to have the kind of resources and revenue stream that they typically need. They need the summer months to get them through the lean time of the fall, winter, spring. And the way things are designed from payroll protection and whatnot, the time when their loans are going to start to have to be repaid if there's no forgiveness is probably at the worst possible time for a hotel. So there's things like that you need to think about in regards to your specific industry as to how are you going to address it, and then you need to make sure your lender knows in as much detail as possible, understanding there's going to be uncertainty, but a plan needs to be in place.
Thank you for those excellent real-world examples for the audience. Frank Shortino, what are two things that you can suggest for businesses that are struggling to survive during this period of the pandemic? And what should they be doing to prepare themselves before they come and talk to you at the SBA?
First of all, what they should be doing is they should be working on and adopting a business resumption plan. That includes safety measures for both their employees and customers in the event of something like we're going through now. And then they should talk to their team of business advisors, and these would be accountants, attorneys, insurance people, lenders, about your business model and changes that you may need to be made. And you should have a team. And if you don't have a team, call our resources, SBA Resources Partners for Help. As I mentioned earlier, small business development centers. We have one at the Buff State. We have one at Jamestown Community. We have one at Niagara County Community. We have one out in Brockport. So these are all available. And then, of course, we've got SCORE. We got a great SCORE chapter in Buffalo, a great SCORE chapter in Rochester, and they're available. And then, of course, we were very fortunate to have a women's business center at Canisius College on Main Street. And these are all available resource partners through our agency. And all of these programs, you can't beat the price. They're free.
Very hard to beat free. Frank, for the edification of others who don't know, could you tell us or define SCORE, SCORE, what it stands for?
Well, it originally stood for Service Corps of Retired Executives. And that was about 40 years ago when it was started. And they realized that there were many people that are still working that want to give something back. And so about 15 years ago, they finally woke up and said, hey, wait a minute, we're going to let people come in. They don't have to be retired, but if they want to still hold their business or work on their business, we're going to allow them to come into SCORE as long as they don't use that as a means of building businesses of their own. And so it's been working wonderful. What it's done is that it's made and no reflection on me, but it's made a lot of younger people come in the SCORE that are still in business and want to help small businesses. And it's been an excellent program. So it's really now that's what it meant originally. Now they're called mentors to small businesses, or small business mentors, but it's still called SCORE. So it doesn't really mean what it says. There's still a lot of people in it that are unemployed. I mean, that are retired, but right about now it's run about 50-50. 50 are still basically all retired, and 50 still run businesses very successful. And you know, there's nothing better than experience, as we know. And the benefit of a SCORE counselor or a business mentor is they've done that. They know what's going to happen, and they've paid for the experience. So why should you pay for it? They've already paid. They're going to tell you what it costs, and they're going to tell you not to pay for that, because they're going to tell you ways to overcome whatever the problem is, or what you must do to get out of this situation that we're in now. So I hope that explains it to you.
Frank, excellent. One of the comments I often make as a professor at a university is that I always learn from my students, and I learned a lot from you with that comment. I knew what SCORE stood for, did not know that you also had volunteers who are not retired, but just an excellent source of support. And above all, as Frank keeps repeating, these things are free. You can't beat the price.
That's right.
Jim Gannon, as a financial professional assisting business owners with their investment strategies, what are the top 3 things you are recommending for them right now?
On the business level, I'm encouraging all my clients that have a corporate retirement plan, a 401k plan usually, or a simple plan or something like that, to reassess what the offerings are within it, because they, as participants and their employees, are limited to that universe of investments that are offered, and the person who owns the company usually, or a delegate within the company, has made the decision as to what to offer. And so as the investment world has changed recently, I think that it needs to be reassessed as to what the offerings are. So that's at the corporate level. On the individual side, where these people are concerned about their own retirement, their own portfolios, everyone, whether you own a business or not, needs to take a close look at their own risk tolerance for volatility. In fact, the word risk is really more aptly put volatility. You know, an awful lot of people are getting very nervous, or have gotten very nervous, as to what happened earlier this year. And so, you know, when the market is doing very well, people seem to forget about that risk is real. And so it takes times like this sometimes to alert them to the fact that it truly is. So they need to reassess that self-assessment of their tolerance for risk and volatility, and then see if they've got some assets that are not correlated to the market. You know, things that have some guarantees built into them, or have you know, a low level of volatility. Having said that, though, rather than panic, rather than react to the short-term local news and national news, stay the course. Your game plan, your goals probably have not changed, and you can't allow these momentary swings in the market to affect that. And so when it comes to their old money, what I call old money, which is the money that's already invested in their portfolio, or their 401k portfolio, or whatever, that they should look to see if it's become out of balance. You know, a properly designed portfolio invariably is diverse, where you've got different pockets of money in different types of accounts. And so they get out of balance when one does poorly and one does well. Sometimes you have automatic rebalancing in your portfolio that's computer driven. But regardless of that, it might be a good time to reassess that rebalance the money that's already in the account. As far as new money is concerned, a lot of people are trying to be opportunistic about this and say, well, I have money that I'd like to invest. How should I do that? The safest way to do it is a concept which is called dollar cost averaging, which simply means that instead of putting a lump sum into a portfolio right now, put it into a stable account and then dribble it into the market over time. Just today, I had a person invest $355,000, and we're investing it actually over the next 6 months, and so it's going to be in a stable account, and then 1/6 of it is going to go into the ultimate portfolio over a 6-month period, not knowing what the short-term volatility is going to be. The next one is this could be an opportune time for people that are interested in having more money in the Roth IRA or 401k to take advantage of the fact that their portfolio might be down at this point. And there's a concept which is called a Roth Conversion, where you take some of your tax deferred money, volunteer to pay the tax on it now, or some or all of it, and then roll it into a Roth, which will from that point forward be all tax free. And so you can take advantage of things that are called tax loss harvesting, where you might have a tax loss on something at this point because of the portfolio having gone down. And so, it's a good opportunity to bite that bullet now and then diversify a little bit on your ultimate taxes. And just one additional comment on that, the Roth concept, which was named after a senator from the state of Delaware, if I'm not mistaken, came into the law for IRAs in 1999, and it didn't come into IRA or 401ks until 2006, if I'm not mistaken. And as much as it's widely appreciated now, there still hasn't been a full generation of people that have collected tax-free money at retirement. And so as appreciated as it is, I think it's underappreciated. And so I believe it's a very good idea for people to take advantage of that. And now could be an opportune time to do so.
Thanks, Jim. Marty Griffith, can you tell us about some of the things that Bank on Buffalo is doing to assist small and family-owned businesses get through this pandemic? And what advice can you give those companies that you're dealing with so that they do not become one of the casualties that has to close their doors because of COVID-19?
Sure, thank you. The first thing that we try to provide guidance to our small business owners and privately owned companies especially is to kind of take stock of what I call your runway and determine whether you think this crisis is a short-term crisis for you or whether you think it may be a 1 or 2 or a 3-year or longer crisis for you. And part of that, I think, is looking at industries, looking at the sector of industry that you're in, and trying to determine what you think that recovery path or that business resumption that Frank mentioned looks like. So as long as you're not in an industry or a sector that you think is going away overnight, the next step really is to gain some consultation with your banker and gain some consultation with your other professionals that we're hearing from here today, your CPAs, your insurance, and your investment and tax advisors. But one of the things we've done right away out of the gate is provide payment relief. And for those that are in business that are not aware of it, the regulatory agencies that control the banking industry and sector have provided some temporary relief to the banking community, which allows them to provide some payment relief options to borrowing customers. So if you have not asked for and received a face-to-face or at least a Zoom meeting with your lender, it's time to do that, to explore opportunities as to providing maybe some interest-only payment structures through payment relief, potentially deferring some principal and interest payments, and adding them to the back end of your loan to provide immediate cash flow relief. Also, we certainly have been a very active lender in the payroll protection plan. We are going to be an even more active lender through Mike Taylor's programs with what they're doing with the 504 product, as well as Frank's programs in micro lending and express loan guarantees and 7A loan guarantees to try to provide working capital and term loan facilities to those people with the added protection of government guarantees behind it. One of the things that we've been also talking to people about is it is kind of a rolling forecast right now. We ask them to really sit down, whether it's directly with our lenders who are experienced lenders, to review cash flow cycles, really take a hard look at your business, the nature of your business, the nature of your working capital, and how that flows through your business. One of the things that I believe we're going to see and we're going to be ready to assist with as the next couple of quarters face us is businesses will begin to ramp up again. But in many cases, they've exhausted their raw materials or their inventories. They've exhausted collections on their receivables. And so the very time the business and the orders begin to ramp up again, they're going to find themselves in some cases with a cash flow crunch. So we're looking at providing either increases in existing working capital lines of credit, or in some cases it may be a small business that's never needed a line of credit because they've worked on their own cash flow cycles, that is at least temporarily going to need a line of credit to get them ramped up again in their business. And so, of course, we'll be there for those opportunities as well. I've also asked folks to provide an overview to their bank or their lender, talking about internal controls, talking about the management capacity of their business. This is a time where banks are lending into management. And, for so many years, at least recently, banks talk about being cash flow lenders. And I look at Mr. Shortino, who I've been able to know for a number of years now, and this is not the time to just lend into cash flow. This is the time to lend into management capacity in large part, and to utilize all of these programs that are out there that can assist the banks in mitigating risk. So I think, don't sell yourself short is another message I would have. If you've managed a successful business for a number of years and you find yourself in hard times or in desperate times, needing working capital, needing cash flow to support the revamping of your business, take stock in your management capabilities and remind your banker of the good times that you've had as well. The other thing I would say is, I think we're fooling ourselves to think that every business or every industry or sector within an industry is going to survive this. And in those cases, I think we need to have honest conversations with ourselves, with our clients. And, in some cases, it may be either reinventing yourself or looking at a business model that partially reinvents your business, because the alternatives may not be there to ramp up within the next year or two, depending on an industry or a sector of an industry. And, I get a kick out of it when I watch TV. My wife and I like to watch that show, The Voice. And, that's a case where it's a live production in most cases, but they couldn't all be in the studio. So they did it virtually over the past several weeks. And it's amazing when you see something that the purchasing community, the customer base still wants, but we're finding we have to deliver it in different ways. As we look at the banking community, almost 20% of the new accounts we opened in the last 60 days came from online account new openings. Most of our increase in transactions over the past 60 days came not through a drive-up lane or a lobby traffic. It came because people are utilizing their mobile banking products and their internet banking pieces. So different ways to deliver the same commodity or the same service that we've all become customary to or comfortable with. But just going backward, I would say that the biggest thing that a small business owner can do right now is to take stock of that runway again. How long is it that your cash flow is going to be impacted? And use that as a basis for conversation with your bank to talk about either payment relief options to get you through this period of time, or talk about what mechanisms does your banker have to provide more working capital. And we can ramp up with your businesses. We can take a ramp up in receivables and put a formula behind that that protects us and protects you as a business owner, to provide the working capital you're going to need to get through the pandemic, regardless of whether it's a 1-year pandemic for your business or a 2 or 3 year pandemic. I'm very, very strong and very confident in the community banks. I think this is the time where community banks have not commoditized business lending. You still have a wealth of knowledge in your lending staffs out there. This is the time to be speaking with those folks in a very consultative way.
Thank you, Marty. One of the terms that comes to mind, listening to your comments, is the word flexibility, which is very encouraging for someone like me, business person living in Western New York. The term flexibility is not one that I often associate with the banking industry, but I think that message comes through loud and clear in your comments and how you're approaching this whole pandemic situation on behalf of your clients. We'll go back to Brian Donahue. Brian, with Fried Maxick, a strong accounting firm with information technology and security focus in your work. What are some of the security risks that businesses face with working remotely? And obviously, we're all working, or most of us working remotely right now, and that will be an ongoing situation. And what should companies do to reduce those risks that are endemic in the remote workforce?
So, as we all moved remotely very quickly, we had a hard time deploying people and deploying equipment and making sure that the security surrounding all of those aspects was there. You know, most business continuity plans, they provided for people going to a different facility, a facility owned by the company to work, but then we sent everybody home. So that caused a lot of problems where virtual private network technologies had to be deployed very quickly. Those things, as they're deployed quickly, you didn't think about all of the security concerns around it. There might have been holes in those security concerns. And those holes need to be looked at and configured. So go back right now and take a look at all of the security around your VPN networks that you put out there and make sure that you've got them configured properly. Call a professional if you need some help, if you don't understand them. They are very difficult to understand. The other thing is you need to have good procedures in place, and you need to train your employees on how security works. When you're in the office, you kind of take it for granted that your machine is secure, and all of a sudden you're home, and if you didn't pick up your laptop or if you didn't have the ability to take a company-owned machine home, all of that security that was built into that machine for you by the company is no longer there, and that provides a security risk. You know, people are our greatest asset, but when it comes to cybersecurity, they're also, unfortunately, our greatest liability. Phishing campaigns are out there. We've all heard of the ransomware attacks where, you know, somebody clicks on something and a very, you know, mundane email comes in and you open it and you click on the link, and the next thing you know, your computer is being taken over and they're tunneling into your network. We don't want that to happen. So be very conscious and make sure you train your employees what to look for when those phishing campaigns come in, especially for that. The other thing that we need to really pay attention to is phishing campaigns that are directed. I've seen phishing campaigns over the course of my career where, you know, an email will go to a payroll administrator and it will look like an employee is asking to have his direct deposit or her direct deposit changed in the banking system. You know, most people had policies in place where we would do this via paper. We would do this in person. Well, now we're all working away from the office. We do need to make changes to our payroll, and we're doing it via email on unsecured systems. So you need to have a policy in place that if a payroll person gets that type of an email, pick up the phone and make a call. The other things that we hear about are, you know, accounting clerks or, you know, somebody like that receiving an email from a CEO that says, hey, I need you to transfer $1 million to this bank account. We're paying this vendor, transfer the money, please. And, you know, that money all of a sudden is wire transferred out the door. And then 2 days later, the CEO calls and there's a conversation and, oh, that was not me. So again, have policies and procedures in place where you pick up the phone and make the phone call. It is very prevalent that phishing is out there. It's even higher now than it ever has been. It's the easiest way for people to access your system. The other type of phishing campaign that's out there is all they want is your credentials so that you sign in. Somehow they send you an email where you're supposed to sign in or change your password, and now they have your credentials. And it's not only from a personal standpoint that they're trying to get your information, but they're trying to get your company credentials where they can then get into your system and cause mayhem again. And it might be a ransomware attack where they're trying to get money, or it might be just an attack where they're trying to get information. They're trying to get, if you have personal information, if you're, especially personal health information, that is very lucrative on the black market that's out there, the black web. So people are just trying to get in somehow, and the easiest way to get into your system is through an employee that gives up their credentials. Make sure you have policies in place and train your employees to recognize those type of emails as they come in. That's probably the best thing you can do.
Thank you, Brian. Quick time check here. We're beyond the 45-minute mark, so roughly 15 minutes to go. I think we've got enough time for each of the panelists to answer one more question. And let me come back to Brian Donahue. Brian, what kind of advice would you have right now for business owners and leaders that what should they be doing today to support the ongoing viability of their companies?
So all businesses are very different, even though those that work in the same marketplace are different, but they all have one main focus, and that's cash. We all need cash to operate our business. I think the most important thing you can do is evaluate your customer base, make sure that customer base is viable, make sure that you have good credit history on that customer. If you notice that the aging of the receivables is getting out there, pick up the phone, make phone calls, try and get an understanding of what's happening. Pick up the phone and talk to the salespeople that are responsible for that account. Your salesperson actually is your best eyes and ears on what's going on with an account. You have to be able to pick up the phone and talk. The other thing is you want to make sure you're in front of the customer. If they are having problems, you want to try and get a payment plan in place. Maybe you can get a personal guarantee from the owner that the receivable will be paid. Those are all types of things that you need to get your hands around, especially from a receivable point of view, because that's where your main cash is coming from. You also need to have an ability to drive your revenue cycle. So you need to make sure that you're not just getting a sale to get a sale. You need to make sure that those are profitable sales. So you need to have good policies in place that gives your salespeople something to sell. And even though it is on a minor discount, be very careful, do a very good plan to make sure that you're not, shipping dollars every time you make a sale. You want to make sure that that is a very well-defined process. I guess you have to understand that the easiest way for your customers to finance their business is by extending their payments to you. So, don't let that happen. Again, conversely, the easiest way for you to finance your business is to extend your payments to your vendors. So if you can pick and choose, find out which vendors may be able to take a little bit longer to pay, you might go back and actually make a payment plan with your vendor to allow you to continue to operate, and maybe that payment plan will be different. If you can't do any of that, is there a possibility to get equity into the business, to increase the equity contribution in the business, to increase the cash? If you can't do any of that, you pick up the phone and you call Marty, Mike, or Frank, and maybe they can help you arrange some debt financing. Before you call them, call us, because we want to make sure that we've got a good business plan. As Michael was saying, we want a good business plan to present so that you can be ready to go and have it well thought out so that you understand the payments. Last but not least, if you're planning on major investments to your property, plant, or equipment, you're going to have to defer those. You want to look at the expense side. What expenses can you decrease either quickly or over the long haul so that you can restructure your business from a cost perspective? getting the cost out of your product, getting the cost out of your business is always a way to, get more cash flow.
Thank you, Brian. Jim Gannon, what suggestions do you have for company owners for sources of funding to meet the cash flow needs to keep their businesses viable going forward?
Our clients, our insurance clients that have permanent life insurance come to us quite often and at our suggestion to tap into their life insurance cash values for a very flexible loan with a lot of speed and convenience, with no credit checks or none of the formality that's necessary to get a traditional loan. And we encourage them to use the cash value of the life insurance as a business asset, even though it's accumulating towards retirement perhaps, or probably. We want to encourage them to tap into it. And one of the things that's not frequently known about a life insurance loan is you're not borrowing your own money. What you're doing is you're using the cash value of the policy as collateral. The insurance company is loaning you the money. And the significance of that is the fact that the cash value remains in the policy and it's still growing as though the loan wasn't there. And so the interest on the loan that's being charged for the loan is the gross interest, but the net cost of the loan is the gross interest that's being charged minus the accumulation of cash value that continues unabated during that period. And then there's repayment flexibility. There's no repayment schedule, and so that can be a double-edged sword, of course, because we encourage people to treat it like any other loan and pay it back on a timely basis, so it's there when you need it again. But ultimately, if the person passes away and there's an outstanding loan balance, it's just subtracted from that. And then the second one, I'll be brief, is 401k loans, whereby if your 401k is designed to allow for loans, you can borrow up to 50% of your loan of your account balance, maximum $50,000. And during the coronavirus crisis, it's been extended to 100,000 maximum. And once again, it's fast and convenient. There's no credit checks or anything, and you're allowed a flexible repayment schedule up to 5 years for most loans. There's a couple disadvantages to it that, in the interest of time, I won't go through, but it's still a viable place, both that and the life insurance loans, to be able to access quickly and without the formalities.
Thanks, Jim. Marty Griffith, as president of a regional bank, what kinds of initiatives is your institution recommending to your clients to keep them going forward and to be able to accelerate coming out of the pandemic?
I think that the big thing that we're sending the message to our clients in is that, don't be afraid to approach us and inquire about increases in working capital lines of credit. You heard me say that a little bit earlier. I think that a lot of people have burned through their cash flow cycles. They've collected on those, that spin or that turn of inventory and receivable base. And at the very time they start to see recovery, I think they're going to need us even more. And they're going to need us for things outside of the payroll protection plan. They're going to need us for more traditional financing, supporting the working capital needs. So I guess the message would be, hey, we're here. We're going to be flexible. And when I say we, I mean the industry in whole. I think you'll see more flexibility out of your bankers than you've seen in the recent past. And we want you to be very open and honest with us about the needs of your business so we can help you in the resumption of that business.
Thanks, Marty. Frank Shortino, what are you seeing in terms of activity with new loans and businesses growing? And do you have any suggestions for initiatives that companies should be thinking about before they come to you?
It's not surprising to us to see small businesses forging ahead with their plans for starting and expanding their business. Our regular finance programs are on pace with last year at the same time, so that's indicative of what I'm saying. And the credit markets are still very favorable for taking on debt. And I think this was shown earlier by Marty's comments, first and second comments. And we are very fortunate to have another great community bank in the area called Bank on Buffalo. And Marty, while I got you on the line, thank you for all you've done for us in this last few years. But for all new SBA loans through September 27, 2020, I don't know if a lot of people know this, but any loan that was made after March 27 up until September, the end of September, we will pay all the first 6 months payments. This is what's called an incentive, so that you can make the loan. And even if you had loans that were made prior to that, these incentives would also be available to you. So they're out there. Get in touch with them. You know, as the saying goes, necessity sparks innovation, and small businesses are the most innovative and agile, greatest people in the world. That's what I say.
Great, Frank. Thank you. Mike Taylor, do you have any final thoughts on words of wisdom for the audience or any of the companies that you might be dealing with? What's the message you'd like to send them away with at the close of this webinar today?
Words of wisdom, I'm not sure. Frank, I think is probably more wisdom than I have, in that he felt all along that, you know, businesses continue to apply and grow their businesses and apply for capital. Quite honestly, I didn't think that was going to happen. I thought it would be quite a while before we saw additional lending. I couldn't be more wrong. I'm in the middle of, I was just jotting down, in the middle of 7 different deals right now, in various stages, all real estate. I do a lot of real estate lending. There's a couple looking to do a startup daycare. There's a individual looking to buy a small grocery store. There's a farming operation. There's a pet cemetery, oddly enough. Someone looking to buy a pet cemetery. There's a convenience grocery store looking to expand their location. There's a fruit processor we're working with. There's a retail nursery that we're working with. At the same time, to echo Frank's comments, a lot of the loans that I've had approved, we are trying to get to the closing on those as quickly as possible in order to maximize the 6-month payment waiver that the SBA is offering on those loans. And I'm happy to say, Marty, if you're listening, we closed one of yours today. They're all set. So, but we're busy. We're busy on all fronts, and I'm happily surprised.
Okay, excellent, Michael. I think all of the participants on the panel can see the question. I'd like Brian Donahue to take a crack at this one. The question has come in from Bob Lane, who's up in Toronto. Bob is a longtime supporter of Niagara University, very involved with the Family Business Center. I've met him a number of times, and he's got a long track record of participation with all kinds of startups, some really big name companies, highly recognized business expert. And he's raised a question that I haven't seen before. But Brian, because your firm is so deep into security and information technology, deals with a lot of companies, how do you see this question that Bob has posed to us, that what about access to the broadband for people who are working remotely from their homes? Are those individual workers paying for that access, or how are companies handling that? Can you give us any perspective on that one, Brian?
I can give you this perspective, I guess, from Freed Maxic. Our workers are paying for their own broadband access. We have, I guess, everybody it just seems like all of our workforce had broadband access before the pandemic, and they were able to transition to working from home quickly. I guess I don't know the Canadian plans that well, but almost all plans in this area have unlimited data access. So it wasn't any increase in cost than what they were already bearing for their personal use. I did find out, as my son is moving to Cleveland, Ohio, to start his residency, and as he went to sign up for internet access, they do have a data cap in the Ohio plan that he's in, which surprised me and surprised him. So we had to evaluate that a little differently. But in the U.S., or at least in the Buffalo area, it just seemed like we were all able to have unlimited data for everything that we did. As I work at home, I've got, it's me, it's my son, it's my wife, it's my other son who is an engineering student. I can't tell you how much stuff we're sending through that pipe on a daily basis, and we've had no issues. So as far as payment for the internet access, we just haven't seen any request for that kind of a payment.
Thank you, Brian. My clock says we have reached the end of the line. It's 4:01, so the panel discussion is coming to a close. There will be copies available for future use. If you have any additional questions, you can direct them to the university. And I'd like to thank the panelists, Brian Donahue from Fried Maxick, Jim Gannan, Planned Futures Financial Group, Marty Griffith, Bank on Buffalo, Frank Shortino, U.S. Small Business Administration, and Mike Taylor of Pursuit Lending. Gentlemen, it's been a pleasure, and thank you all for participating.